we do have Mark Konyn, who is joining us. He's a strategist from Hong Kong. Mark, now to begin with, increasingly people in India are expecting the budget this time around to be more populist and less prudent on policies on account of how the elections have panned out in the 5 states in India. What's your take on this?
Well, I think there'll definitely be a tendency now to try and build up some populist support, given the poor showing in those 5 elections. So there'll be a bias, I think, towards more populist measures, but they are somewhat constrained by the fiscal conditions at the moment in India.
Right, and Mark, how much firepower do you believe the Indian government has on the fiscal front to continue affording subsidies? Do you see the finance minister detailing a roadmap to reduce subsidies on oil, fertilizers, and even possibly food?
This is a careful balance, I think, in terms of trying to reduce dependency in the economy on the subsidies, but not wanting to build up inflation expectations again at a time when inflation is starting to moderate a little bit. And it's really been the inflation concern that has reflected negatively for the government in those recent elections. So the government's going to try and tread a fine line, but it has very few degrees of freedom, really. If you look back on last year's budget, the spending that was detailed was predicated on a fairly aggressive growth forecast, and unfortunately that wasn't realised. So I think coming in to 2012 budget, the degrees of freedom are less, of course, because the economy is already slowing.
Mark, in the current political setup, do you see this budget laying a roadmap for reform measures over the course of the next 2 years?
Well, I think the investors would hope that a slightly longer-term perspective is going to be adopted, but traditionally in India, investors have been disappointed on that front, and budgets tend to be rather short-term in their focus.
Right now, Mark, on the fiscal consolidation front, what to your mind should be the government's approach, and how do you believe they can increase revenues and also possibly reduce wasteful expenditure?
Well, there needs to be supply-side reforms, as we've talked about in the past, but I think also in terms of placating certain voices within the country, there needs to be some redress, or there needs to be some answer to these allegations on corruption, and the government so far have failed to push through measures to address some of these allegations.
You know, the government has also severely fallen short of the divestment target this year. Do you see the next year any different, and do you believe that they would have perhaps learned their lesson after the disappointing outcome that we saw from ONGC, so as to perhaps not repeat the same mistakes that they made in FY13?
Well, disposal of assets is going to be a key component of improving efficiency within the economy. The ONGC fiasco, as you call it, was unfortunate because I think investors feel that it was too aggressively priced, and as a result damaged the aftermarket. If you want international investors in particular to come in and participate in further asset sales, these prices need to be more moderately set to encourage that aftermarket and to encourage both domestic and international investors.
Mark, do you think that the Indian finance minister will be able to trigger capital formation and also private capital expenditure by adopting the right policies in this budget, because corporate India has been almost quiet on the capital expenditure front for at least 2 years?
Yeah, I think on the capex fund, this is the area where perhaps the budget is not going to perform regardless of what measures are put in place, because where we are in the current cycle, I think there's a risk that the public sector will crowd out the private sector, and as a result that capex formation will not be forthcoming.
Mark, according to you, what are some of the measures that the government can and should take in order to send the right message to the foreign investor fraternity and perhaps encourage more portfolio as well as direct investment in India?
Well, governance is a big issue in India, as we know, so any measures aimed at greater transparency will of course encourage investors both in the medium and the long term. But beyond that, I think we're going to see a little bit of fine-tuning around certain sectors.
Now, a number of strategists, Mark, say that this year's budget will be more important than usual as the government needs to shed its image of policy paralysis and also take proactive measures to support growth in India, which has, of course, where economic growth has taken a severe hit and gross capital formation has stalled. What's your take on this?
Well, I think we hear this every year in India, that this is the critical year for the government to take action and reassure investors. So in that sense, it's no different to any other. I think what is different, though, is where we are in the cycle. We've been through this period of tremendous overheating in the Indian economy. So as we're moving beyond that, growth is, as you say, slowing or stalling. And I think it's going to be more difficult in this environment for the government to be able to spend its way out of the situation. So I think investors are aware of that. Certainly international investors are aware of that and the difficulties facing the policies and the policy initiatives. So I think a focus on the sort of slightly longer term will probably be what international investors are looking for, to get some reassurance that it's not all knee-jerk reaction to current circumstances, but there is a due consideration given to the longer term, in much the same way as we've seen China manage its own overheating problems coming through this similar period.
And finally, Mark, say that the budget fails to deliver on its expectations. How do you believe the markets will digest all of that news? What's the worst-case scenario that one should brace themselves for?
Well, I think the good news is generally international investors don't hold out much hope or don't have too many expectations on what could come out of the budget and its impacts on the stock market and the outlook for investment. So I think the range of outcomes is pretty narrow. Typically, before the release of all the details, the market stays fairly cautious. So the worst case scenario is not really that damaging, and the volatility around that will not be too severe. And I think investors will wait, see and understand the details, and then perhaps do some sector rotation depending on which sectors appear to be more favourable in the short term as a result of any policy initiatives.